Welcome back to the IIF Future of Insurance webinar. I am pleased to welcome our next panelist to discuss the future of digital insurance, a broad topic that encompasses innovation, data issues, and cyber and operational resilience. My colleague, Sue Ningson, Associate Policy Advisor at the IIF, will be moderating this session. Joining her for this discussion, I'm pleased to welcome Matt Kavanaugh, Director, Group Government Relations at Prudential PLC, Claudia Donzelman, Global Head of Regulatory and Public Affairs at Allianz, and our colleague Martin Bohr, Director in the Regulatory Affairs Department of the IIF. Over to you, Sue.
Thank you for the introduction, Mary Frances, and thanks everyone for joining this session on the future of digital insurance. I'm Sue Ningson, Associate Policy Advisor on the IIF Regulatory Affairs team, focusing on the insurance sector. Today, we're honored to have the opportunity to explore the topic of digital insurance with three distinguished panelists, which Mary Frances just introduced. So before we start, I would like to remind everyone again, and especially those who just joined the webinar, that there is a Q&A function at the bottom of your screen. So if you have a question, please submit your question through the Q&A function, and we will address some of them hopefully later in the session if we have time. So turning to the topic of the session, as some of the speakers in the previous session already touched upon, the COVID crisis is playing a role as a catalyst in the digital transformation, and technology has played a key role in tackling organizational challenges and reaching out to customers in social distancing during the crisis. In this session, we're going to take a closer look at insurers' digital strategies in responding to, recovering from, as well as going beyond the COVID crisis. Matt, let me turn to you first. Could you share with us what measures your firm has been taking so far in terms of supporting staff's remote working and digital delivery of products and services? Which tools and technologies have been proven most helpful?
Thank you, Sue. And it's great to be here. It's clearly a very important subject that we're all spent much of the last few months thinking about. I think the way you put it, which is that this crisis has been a catalyst, is absolutely the way it feels to us. I mean, at the moment, we have around 70% of our colleagues worldwide working remotely. At the peak, I think it was well above 90%, and obviously in some countries like the UK, where I am now, it's more like 100%. But we've been able to do that without really a material increase in costs, and that's shown how some of the investment we've made over recent years has really paid off. And it's similar when it comes to how we relate to our customers. So in China, for example, last year we invested in upgrading the way we use WeChat, and now we can do we can do pretty much everything from a customer finding out about a policy, applying, making a claim, getting a payment online, and so that those rates have held up very well through the crisis. In Singapore, for example, it's been about electronic point of sales measures that support agents who are themselves now working fully online. And probably our biggest sort of focus through the COVID crisis has been our smartphone-based healthcare app called Pulse, which is an AI-powered app that has a symptom checker and information, but also links to an ecosystem with other fintech providers, and enables people to it's free to access, but enables people to go through and get healthcare cover. And we were already starting to roll that out, but that's accelerated, and the uptake has really taken off with the crisis. As part of that, we offered free COVID coverage as part of the rollout, and we've now had hundreds of thousands of new applications in several markets, and it's now up to about 4 million downloads and about 1 million new policies, most of which have been to customers who haven't had a policy with us before. So those are examples of how things that we were already doing, this has been a kind of pressure we need to move on with those quicker, but also an opportunity to do so.
Thank you, Matt. And it's interesting that you bring up the example of the healthcare app. We'll come back to that, I think, later in the session. But let me turn to Claudia next. Claudia, Could you share with us Allianz's experiences in responding to the crisis, and what are some of the preliminary lessons learned?
Thank you very much first for your invitation and for speaking here. So indeed, a very exciting topic. So many of the things have been said already. So it's interesting to see that the major response measures across companies are very similar. So what I would like to add is, I mean, what you see in crisis is, and in particular with regard to technology and digital, is that the crisis puts kind of a magnifying glass on any cracks or frictions that you have in the system. And if you don't see that, it tells you that your system is pretty robust. And that's luckily what we experienced. So what we had in place before we started into this crisis was a year-long experience with a very comprehensive group protection and resilience framework. And this framework has different components. So that has business continuity. It has, and that was important with regard to digital, IT service continuity, global incident management, and crisis management. So having kind of this robust system in place is really the basic for being available in the digital world. And that goes into two directions. So that means you're available for your employees, and your employees are able to work from home. And same experiences here, as Matt said, in the peak, we were above 90% working from home, and that worked pretty smoothly after hours, actually. And then on the customer side, if you really want to live up to your purpose and want to be there for your customer, you need to come up with something new, and you can't invent the wheel during the crisis. So you need to use what you had before. We added a couple of things during the crisis in order to be really available as a digital partner. And that meant on the customer side, for example, that we implemented, as we called it, doc on call, so that our customers didn't have to go to the doctor immediately, but that they got a first check via telephone or computer. So that was an important thing during the peak of the crisis, that we could offer that to our clients. And then what we did on the mental health side, and we talked about this, or you heard that in the panel before, how important that was. We worked together with an organization called Hello Better to kind of be there for our customers, and it went even beyond customers, so everybody is able to use the service if you have mental health problems, to get in touch and discuss. So on both sides, so working with your employees as well as with your customers, the importance really was that you have the systems in place before. And I mean, I think it's the same in all organizations. We always complain about IT and that it doesn't work and it's too slow and whatever you see. And it was so surprising to see that during the crisis, it worked. And to give you a little bit insight, a funny element is really, if we talk about the challenges that we had, the one challenge we really had was a non-digital challenge. And that was actually, as part of our PCM preparation, we have identified across the world critical employees. So employees who are doing critical services. That means if we go into a crisis, it's important you know who these people are, how you give them extra service or extra priority when it comes to IT equipment, etc. But what we hadn't in mind, because no one had foreseen such a crisis, was who are the critical staff or employees who need to be on site. So that was interesting. Everything worked on the digital side, but we never thought about, okay, but who are the people who nevertheless need to go to the office? And that was important to prepare in case you go into a complete lockdown and you really need to ensure that you know who this is who has to go to the office. So that said, the digital tools you probably need to have in place. If you don't have them in place, the crisis comes as a magnifying glass on the cracks and frictions that you have in the system.
Thank you. Thank you very much for the interesting insights. And Martin, you are leading the IAF Cybersecurity Working Group, which both banks and insurers participate. Francis from the first session has shared with us some of the shifts of risks in cyber and measures taken by his firm. So from your discussion with insurers, is there an increased level of concern regarding cybersecurity as insurers' reliance on technology increases? What are some of the measures that insurers are taking to mitigate cyber risk?
Yes, thank you, Sue. As mentioned by Jonathan Dixon at the beginning, and then obviously also in the last panel, cyber risk is a real priority for the insurers and for the insurance industry. If we look at the annual cost globally of cyber events as a whole across all industries, they're estimated to rise to US $6 trillion by next year, which is up from just 400 billion 5 years ago. So I realize that's for all industries, but it's also very relevant for the cyber insurance market. If we look at cyber attacks in the insurance sector, just like the financial sector as a whole, we have seen them growing exponentially over the past few years in terms of number, scope, sophistication. There was a study by the BIS last week, for example, which noted that the financial industry is still suffering the largest amount of cyber attacks of any industry, but it suffers lower costs on average due to the greater investment in technology. And the BIS also noted, seconding Francis's point on the last panel, that cyber events have plateaued in the financial industry over the last, let's say, 2 to 3 years. So they're still very high, but they are plateauing over time. We don't know where we're going to go going forward, but that's the case at the moment. In terms of the reliance on digital technologies, obviously insurance companies have been migrating towards digital channels in the past decade in an effort to create tighter customer relationships, offer new products, expand their share of customer financial portfolios. We've also seen increased investment in IT and core IT systems, as well as in newer platforms such as agency portals and online policy applications and web and mobile-based apps for filing claims. And these are all strategically very beneficial, all these investments, but they also introduce new cyber risks and attack vectors to organizations, especially so for smaller insurance firms who are relatively inexperienced at dealing with an omni-channel environment for their platforms and their customers. Now, of course, insurers have undertaken a lot of measures to mitigate these risks, and they have substantial programs in place to identify, protect, detect, respond, and recover from such attacks. But you still need to keep your program sharp. So what have we been seeing now? Because COVID-19 has obviously been testing everybody because we're working from home and those sorts of things. So we're seeing that the insurers are constantly assessing other vulnerabilities. Where can they come from? What can we do about it? We're seeing that insurers are sharing information and also patches about attacks. This is done with peers and with authorities, and it can be done through platforms like FSISAC. We're seeing strategic collaboration with authorities and governments, which is also very important. We're seeing a reviewing of the cloud architecture and the security capabilities. The cloud is both beneficial in that it was built to withstand cyber attacks, but on the other hand, if there is a cloud breach, then it impacts many firms at once, as we all know. Firms are also looking at reducing their supply chain risk and seeing what can be done there, also in terms of resilience for their suppliers and their vendors. They're practicing incident response and recovery capabilities to make sure that when something happens that they can recover very quickly. They're also have been setting aside specific budget for cyber, and they're prioritizing it and making sure that they're spending it. They're also focusing on building a skilled talent pool and optimizing resources. Now, given the COVID-19, we have seen that the attack vector, if you will, has increased because so many employees are working from home, they're working on their personal devices, and the policyholders are doing the same thing. So there's just a bigger space. The good news is so far is that we haven't seen any major cyber breaches reported in the insurance sector whatsoever. Instead, we're hearing about a lot of the traditional attacks. We're hearing about the phishing attacks where they're trying to get your passwords. We're hearing about the spoofing attacks where they're trying to pretend that they're an insurance company, but they're not, but just under a COVID wrapper. So in that sense, we haven't seen any increases there. But it's obviously still early days. We don't know how long this is going to go. And it's important to keep investing in your cybersecurity capabilities.
Thank you. Thank you, Martin. Thank you for a very comprehensive introduction to the situation now. And I think it echoes back to many of the points made in the first session. So Claudia, if I may turn to you again. So from an insurance perspective, could you share with us what your firm is doing in response to the increased need for cybersecurity during the COVID crisis?
Sure, I'm happy to do, and I can already say so many of the things that Martin said are true, and I will talk about this, how this landscape looks at Allianz. But let me start first with one thing that we need to remember is humans remain to be the biggest risk in cyber, right? I mean, that is important, and that tells you something about the measures that you need to have in place, and then in such a crisis probably need to increase, because it's people who kind of are attacked with phishing, etc. Always, also we think it's a digital risk. So how do we manage cyber risk at Allianz? So actually, it's the same. You need to have your framework in place before the crisis. Otherwise, you are not able to manage it during the crisis. And we started implementing a global IT security investment initiative already in 2016. So it's a global initiative, so you don't have fragmentation across the group, because digitalization is a global topic, and cyber risk is also a global topic. So that was important. And as part of this initiative, we implemented a so-called ACDC. So you can remember that, that's good. It's called Allianz Cyber Defense Center, where we currently have more than 50 people around the world. They work 24/7 in a follow the sun model. And they are constantly screening and analyzing the attacks that are coming in. And when you go into crisis, you of course increase focus on that, and increase people sitting there and screening the environment. What is particularly important is that you ring fence your IT security budget during the crisis. I mean, that sounds so natural, but the moment you go into crisis and you think about, okay, how do I manage my costs? Make sure that you ring fence everything you have for IT security. So as Martin just said, we haven't seen so far any new threats. Nevertheless, the threat landscape has changed in certain areas. So the landscape for us is, you have a matrix of the likelihood and the impact of the different threats, and there you see changes, and that is mostly related to that people work from home. So you have more phishing and malware, you have more CEO fraud, you have more data losses. That is all increasing on the likelihood, so very much increasing in the likelihood. And then on the impact side, what is increasing there particularly is DDoS, so distributed denial of service, where the impact can be higher. But that is due to the nature of the crisis, and that everybody works from home and relies on IT. So this is what we see, that both likelihood and impact are increasing, not in the same threat, so it depends on the threat. So you need to have then improved things if you don't have mitigation measures in place. We had them in place for all the threats that we knew, because there were no new ones. And this was then really the moment of truth for all the IT security guys who always do awareness trainings, etc., where you think in normal times, okay, do I need to have another IT security week? We know what this is all about, but it's really important that it's something natural for people, and they are alerted by the patterns they already know from the past. And this is why I started with the human being at the beginning. This is the major risk. So how do people react to the attack? And yeah, that went pretty well, because there are no new threats, but nevertheless, you constantly need to screen and repeat the training measures, the filters, whatever you have in place.
And always be prepared for the rainy days. And thank you for sharing those insights, Claudia. Before we address regulatory implications on cybersecurity, let's take a couple of minutes to look a little bit further beyond the current phase of responding to the COVID crisis, because sooner or later, we will find ourselves eventually in the recovery stage from the crisis, and we may need to re-examine digitalization strategies given the changes in both consumers and the market. So let me turn to Matt. Matt, what do you think are the biggest changes in consumer behavior attributable to the current environment? And do you envision those changes to continue during recovery from the crisis?
Thanks. I think we're all seeing, or most of us are seeing, big changes in lots of different sectors and different walks of life. And when you have a catalyst like this, as you were saying, it's not so much just the change, it's the speed with which things can change that maybe we've all been thinking about for a while, and then suddenly they can change more quickly than anybody expected. And for us, I mean, Claudia mentioned earlier the changes around telemedicine. And so, this is a service that we offer through our health insurance, and we're offering it through the Pulse smartphone app that I mentioned earlier. But, some markets have been pretty good at taking it up, pretty developed. Others were quite resistant. Sometimes the regulators were resistant, but sometimes sort of culturally people were resistant to it. But when they have to, or when they really don't want to travel or aren't able to travel to see someone, it's been surprising how quickly that can change. And that, I think, is something that we expect will continue. It's hard to see that going back. Obviously people will still on many occasions want to see a healthcare professional in person when they can, but a lot of the interactions could go to telemedicine, and we expect that to continue. So that's one example. Another on sales of insurance products. Again, this is something which all parts of the industry, companies, agents, regulators have long assumed that, particularly with complex products, but really with sort of big ticket financial services products, people want to do it face to face. That's been the assumption, and everybody's worked with that. We've tried to move, some parts of our interactions with customers online, but the sales process has remained often face to face. That too, we've seen that start to change. Again, it's different in different markets. And the attitude of the regulators is different. Some countries have embraced it and said, look, this is the way we want to go, not just to get through the crisis, but actually we see this as the future. Others have been very explicit that they see this as a temporary measure, and as soon as the crisis is declared over, they will expect that we will go back to the old ways of doing things. Now, one question with that is, how will customers react? If they like doing this and there's a great customer pressure to continue, then I think it may be harder to go back to the old ways of doing things. And it's partly a question of how long this current crisis lasts and how embedded these new ways of behaviour become. And partly it's just the organic changes in the way people engage with this. And in particular, I think the old assumption was that younger generations would want to do this and older ones would not, but that's not what we're seeing at the moment. I think most customers are willing to do this and can be made to feel comfortable, and we help to feel comfortable with it. The final thing, just on I think something we all need to think about is there's a greater demand in a sense for insurance when people go through an event like this. I mean, insurers are here to help people handle life's big risks, and provided we do a good job of that as a sector, people will want more of our products and our help. But on the other hand, particularly in some developing markets, there's going to be a lot of pressure on household disposable income, and so they might want ideally to have more insurance cover, but they might find that difficult. And I think that's something that we need to think about in terms of how we design our products and how we do our pricing. But I think it's something that the governments and regulators are going to have to think about as well in terms of when we return to, hopefully soon, back plotting a path through to the recovery.
Thank you, Matt, for the insights. And Claudia, may I ask what implications the COVID crisis have on the digital strategy of Allianz?
Before we go into our digital strategy, let's ask a question: what implications does the COVID crisis have on customer behavior? And what this is that everybody becomes a digital native. So that's kind of what happens out there, and you need to react. And for the digital strategy or digitalization strategy, it's again an acceleration of digitalization at every touch point with your customer, with your intermediary, and with all stakeholders that you have. So if you have already digitalization in your corporate strategy, you need to put way more focus on that. If we talk about how we do this at Allianz, so we have a corporate strategy that has 3 pillars. They are called outperform, transform, and rebalance. And as you can imagine, digitalization sits in this transformation bucket. And we started working already on that and said what we need in the future for the digital work, a world where we work with digital natives, is we need simple, we need scalable, and we need digital products. So that is kind of the situation we had before. So the train already left the station, and we now put more focus on that. And we kind of have 2 engines of transformation. The one is we need to transform our traditional business. So our core business model, we call that Allianz customer model. And the second is that you have a direct channel, that's Allianz Direct. On the transformation of the traditional business, and that's probably the bigger challenge, we are going to a world where we have, instead of 700 different products in one operating entity, we have one modular master product, and we have one global IT master platform. So that's the way we are going, and we are going from one entity to the next, and we obviously start with the big ones and onboard them in this process. So if we talk about what does COVID do, it accelerates this process. So it accelerates, you need more speed, and you probably have an advantage if you have a bigger size, because size plays an important role in the digital world, and you might have an advantage. But at the end of the day, it's all about it's being faster, the customers more demanding because they have tried it now, and they they tasted it and it tastes good.
Thank you, Claudia. And let me turn back to Matt. So if you are rethinking Pru's digital strategy, what are the key areas of focus in that process of rethinking?
I think similar to what Claudia was saying, we're not thinking about it in terms of rethinking so much as accelerating. So if you think about the pace with which you would move on a digital transformation strategy, there's how fast are customers willing to go, how fast are regulators willing to go, and how fast can you go internally. And I think the catalyst of this crisis means that customers are moving fast, regulators are starting to move, and we need to look at how fast we can move to make sure that we're keeping up with that. We were already thinking about smartphone-based digital health products, telemedicine, as I've said, and about in terms of the sales process and the claims process. Everything, as much offering customers to be able to put as much of it as they want online, not insisting on that. There will always be a place for face-to-face, but even there, how can we support our agents and the intermediaries with digital services so that they can that can work as well for them as it can. So I think it's an opportunity really just to look at everything we're doing, to check that it's going in the right direction, and happily, touch wood, we feel that most of it is, and then just seeing how far we can accelerate that.
Thank you both. And I would like to now turn the attention to regulatory and supervisory issues for a second. In a recent study done by the IAF and Deloitte, outdated and prescriptive regulatory frameworks are identified by 60 bank and insurance executives as one of the top 9 obstacles in large-scale digital transformation. So Matt, what do you think are some of the main regulatory obstacles to digitalization in insurance? Has the COVID crisis exacerbated any of these barriers?
I think it's a mixed picture, as I said earlier. Some countries, China, Singapore, Malaysia, Vietnam, Philippines, for example, you can pretty much do most things online, and the regulators are supportive of that and are working through everything they need to do to support that. Other places, it's a little slower, and you know, that's fine, but we need to work with them to make sure that that we can, you know, there's no reason why, if other countries are doing it and making it work, then they can as well. And some of it is about, you know, more typically when there are more complex products, products with an investment element, there is more reluctance to having that sold online. But in principle, we don't think that should be, you know, that should be a barrier. Somewhat, you know, we need to think about how we can simplify products in order to make it easier for them, for the customers, and for the regulators to think about how they can be sold online. But some of the complexity is, we need to be honest, some of the complexity is inherent. If you want to offer a product with guarantees, you know, which we know that customers like, when you describe in the abstract what sort of thing do you want, you want exposure to investment returns, but you want some guarantees, some smoothing, and so on. That's an inherently complex product, so you can't just turn it into something simple. So we need to work with the regulators and the consumer groups to get over that. So I think we're in that process now. It's around, you know, there's also the sort of the obvious things around knowing your customer, and, you know, just basic things like being able to establish the physical location of the customer at the point of sale and so on. But again, I would encourage regulators to look, you know, to talk. They do talk to each other. They meet in global forums, talk to each other, find out what other countries are doing, and I think that some countries feel that actually they've been. I mean, you know, wet signatures versus digital signatures is a really obvious one, but there are others as well where they feel that actually they can get to a higher level of security via digital sales than they did via the old paper-based process, where some of that sense of security was, you know, perhaps not as robust as one felt. So I think we're at, although I said earlier, you know, the crisis makes us all move faster. Inevitably, the regulatory stuff doesn't move quite as fast. That's understandable. But we're in that conversation now, and I would encourage the regulators to be having, and the policymakers to be talking to each other as well, and trying to learn from colleagues in other countries who are a bit further down the road, and actually, you know, what's gone well, what's gone less well, and how can they bring some of the success stories into their jurisdictions.
Thank you, Matt, for bringing up the regulatory coordination point, which has always been an emphasis in our work at the IIF. So turning to the supervisory aspect, Claudia, in terms of insurance supervision, what are the biggest challenges when it comes to digitalization?
Well, I mean, I'm not a supervisor, so I should refrain from giving advice here. But I mean, if I look at the insurance landscape from my corporate view, so what do I see there? And what I see is that digitalization radically changes the insurance business model. And then I say supervisors probably need to react and change their supervisory model accordingly. So what do I mean with we see a change in the business model? What digitalization does, it transforms the insurance business model in a way that it leads to a disaggregation of the business model. So if you look at the entire value chain, it might be that in the future, and we already see this trend, the insurer doesn't manage every part of the value chain. So there might be other players like marketplaces, comparison websites that are kicking in and taking certain parts of the insurance value chain. And so that's probably something that you see in many areas, but also you see this in cloud outsourcing. Yes, you see this with the interface to the customer, because you have many products that are bundled with e-commerce. So there are many of these trends. I would say we are only at the beginning, but then the question is, how long is it efficient and effective actually to have an entity-based view on supervision? Or do we need to think about at some point in time an activity-based approach to supervision that might make more sense? So it's not about who has the most to-dos and where's the workload, but it's about what makes sense. So who owns certain parts of the value chain? I'm not a person who thinks in extremes, so I don't think you can just flip from one to the other, but I can imagine that supervision has both in the future, so that you of course still have supervision of the legal entity, the insurer, but maybe there are also pieces that are dealt with outside the insurance industry, but still part of the insurance value chain, where you need to find different models. And we already talked about this last year in Abu Dhabi, and therefore I know that supervisors are looking into this. But as the crisis is accelerating some of these trends, that's probably something where focus needs to be put on.
Thank you, Claudia. And the disaggregation of the business model of insurers is also one of the key topics in the IAF's IRC committee. So we will keep monitoring that topic going forward. And let's come back to the issue of cybersecurity. Martin, how has the regulatory community responded to the increased cyber risks and or maybe the shift of cyber risk, as we mentioned, and the need to enhance cybersecurity?
Yeah, thank you. Regulators have obviously been focused on cyber for some time now, and many of the things that are in truck are actually very relevant to what's currently happening and have a big impact, I think, both on cybersecurity side, but also sort of on the broader digital issues. So if we look at incident reporting in terms of what is a material incident, who do you report it to, by when, so that is a big issue right now in the EU, but also think the Financial Stability Board is looking at. If you look at recovery times, let's say that your firm is breached and you're offline, how long does it take until you have to be up again? This is something that supervisors are looking at. Information sharing is still very topical. When you have information about cyber attacks, who can you share that with? In what groupings? Can it be cross-border? Can it be cross-sectoral? Those are all issues that they're currently grappling with. If we look at the use of the cloud services, it's an emerging topic, but there's a lot of different guidance. Even within the EU, almost every member state has their own views on it in terms of how you can use the cloud as an insurer or as another financial firm. Data protection and geolocalization are obviously also very big with GDPR, and we've seen in many countries geolocalization. The questions around data and how to cross borders is obviously relevant now too, where we saw many countries cut off. Governance, there's issues around governance. How do insurers organize themselves? Who is responsible? Who are the incident managers, if you will? Resilience is another current topic that the UK is looking at, and also the US and other jurisdictions. And there's a lot of questions there about your third-party providers, about the cloud. Again, you know, the cloud was recently breached. There's questions about your vendors and to what extent are they resilient, and whose responsibility is it to determine that? Is it the insurer? Is it the supervisor? Is it the vendors themselves? With India having recently also worked from home, it impacted a lot of supply chains. And so we definitely saw supervisors waking up at the bat, and also firms using the cloud more, onshoring more, considering where should our supply chain be. Cyber insurance is a topic that's gotten a lot of attention, you know, the last 2 years, especially now, because so many firms are saying that they should be covered, they should be protected. So we can expect more from the AIS and from others in terms of how insurers should be looking at that. And then I think two other topics are probably stress testing, which we will see more of, including pandemics and maybe also climate risk, as we've seen in the UK more generally. Liabilities are a big topic. When you have things like self-driving cars, who is liable? Is it the algorithm? Is it the manufacturer? Is it the driver who is not driving anymore? So there's a lot of questions there, and I think that the COVID-19 experience is accelerating many of those things. And just to pick up on Claudia's point also, what's been a big focus for our insurers and for our other members is the market fragmentation, is the inconsistency. There are a lot of jurisdictions trying to achieve the same things, but they do it in different ways. The Financial Stability Board has shown this in its regulatory stocktake. And it's really important for firms that are active in different jurisdictions that the rules are consistent, that the rules are coordinated, so that you don't spend a lot of extra time trying to prove the same thing differently to different jurisdictions when they're actually all trying to figure out the same thing. So there's a lot more opportunity there. And we do hope that the FSB and their current efforts will also help in that regard. Thank you.
Thank you, Martin. And I think we have 10 minutes left. So before we go into the last round of questions, I actually have a question from the audience about the usage-based insurance mentioned in the first session. So I will just combine that question with my next question that I'm going to ask both Matt and Claudia. So as difficult as the crisis is now, it will be over, and we will be looking ahead into the future, and the economy will recover and digitalization will continue. So looking beyond the crisis, do you think the speed of digitalization will continue? And going back to the usage-based insurance point, do you think new products like that will change the future products and the future landscape of the insurance sector? Let's go to Matt first, and then Claudia. Matt.
On the pace of change, I think we all, well, speak for myself. I think it's going to accelerate. I think those who were cautious and reluctant, this crisis has forced the pace, and I think it's quite hard to put that genie back in the bottle. So my sense is that it's going to get faster, and a lot, the behaviour of customers, but also, for example, the behaviour of agents who have seen how both the value and the necessity for digital services for them as well. So I think it's going to accelerate. I think in terms of products, I think it's a bit early to tell. I'm not sure I understand exactly what the question was driving at, so I don't know whether if you can maybe Claudia can take that one, or you can help me to make it a bit more specific.
Answers to both questions, yes and yes. So first question, do I think that the speed of digitalization will continue? Yes, and we talked about this. I mean, customers have gotten a taste of the convenience of digital insurance products, and they want to just continue with that. I'm very sure. And even people where you thought, okay, they are not digital natives, they will not go down the road. They had to go down the road, and now they enjoy it. So therefore, it will continue. On the use-based products, yes, I see that. So, I mean, we saw that before the crisis. So we have one product in place. That's something you need when you live in Bavaria. You have the Alps in front of your doors. That's kind of that you can have protection when you're skiing for the day you are in the ski resort, and you are driving there with your family, and then with a few clicks you can just say, okay, we are 4 people, we stay for 24 hours, and I need coverage for that. So that was already there before the crisis, but again, we will see an acceleration. And now, interestingly, so we have a product in Italy currently, and that comes more out of the crisis and out of the discussion around premium refunds, where our colleagues in Italy have an agreement that you can stop your coverage. So when you say, okay, I will not use the car over the next whatever, you can even days. I think it starts with 3 days and goes up to, I don't know the exact number of days, but you can stop your coverage. And that's just the reversion of what we are talking about, the usage-based products, but that will increase because you have that in the crisis. And then it's just one step further to make that a regular product offering.
Thank you. Thank you for that response, Claudia. And the next question is one that I personally am very interested in, and that is, as the competitive landscape continue to evolve in the future, insurers will find themselves working more with insurtech firms. And Claudia, I noticed that Allianz is working with insurtechs in the process of digitalization. Could you share with us Allianz's experience in partnering with insurtech firms, and what are some of the applications applied in the COVID crisis?
Well, yeah, that's true. So we are working with some insurtechs. We are experiencing, before we go into that, or what is even more important is why are you doing that? So what is the incentive that you say, okay, I start working with them? I could also see them as a big competitor, so why would I do that? The reason is, I think, we are moving into a world of ecosystems. So I would say in the future, there's no such thing like this is just the insurance company and the insurance company is only offering insurance and full stop. And that goes hand in hand with the fragmentation of the insurance value chain we just talked about. And the stimulus for that, so where is this coming from, is again the customer. I mean, customer expectations are rising, and what they want to see is a one-stop shop, right? So they are buying their car and they expect that they get insurance. They're buying whatever and they want to have insurance, and they want to decide the moment they do something. So that leads to a radical reordering of the traditional insurance boundaries. And with that, you start immediately making alliances, right? Because you understand it's not only about insurance, it's about more. And the customer wants to do everything together. And with that, you start creating complementary networks. That's what this is all about. And the others in the network have complementary offerings or services, and you want to be part of this ecosystem. And this is where then the insurtech comes into play with the traditional insurer. So if we say we do this, it's early stages in these relationships. And it's not the relationship as an investment. It's really that you try to understand how I can work together with complementary companies in order to improve the service that I'm offering to my customer. So what can this be? So one insurtech we have, for example, is called Vivi, and we were involved in the development. It's actually a digital health record. And why are you doing this? Because you know that doctors and hospitals and medication and then insurance coverage will come closer. So that's the main reason. I mean, we have others, we have platforms that work together on cross-selling solutions for e-commerce, and you want to be in there because if the customer buys something and they can immediately have the insurance coverage in there, there's an added value for the customer, and the customer likes that. And the customer will go where his expectations or her expectations are met. So that's kind of why we partner, and there are different solutions or different ways we are doing that, but it's not so much about what is the insurtech, but better understanding why do you do this, and that leads to better picks of the insurtechs you want to work with. It's this complementary networks that are essential in the ecosystems that break down the traditional insurance boundaries.
Thanks, Claudia. And Matt, I think you have a quick point to make.
Yeah, no, I mean, I would agree with everything that Claudia has said. The only thing I would add again on the issue of sort of comparing different countries. Some countries offer support for the fintech sector. They either offer, regulatory sandboxes where you can try that out, and big established players can work with small fintech companies as part of that sandbox, even if you're a big company. Or they offer other kinds of support to the sector. And Singapore is a good example. And as a result, we're doing a lot of work with fintech companies in Singapore, which is good for us, good for the customers, but also ultimately good for Singapore because they've got a real chance to establish a region-leading center of that. And so again, I would encourage all policymakers and countries to look at how they can support this sector in the future.
Thank you, Matt. And we have about 1 minute left. So last round of remarks for all three panelists. So for Matt and Claudia, I would like to ask you, what is your thoughts on the most important digital trends in the, say, next 3 years? Claudia?
I already talked about this, so you know that I'm excited about it. It's digital health, actually. I think that big data, artificial intelligence, Internet of medical things can really drive things forward. Telemedicine, we already talked about this. I see this as one of the very big trends coming.
Thanks. Matt, what's in your crystal ball?
I think one interesting area is going to be the sort of how much is going to go fully online or how much is going to be virtual face-to-face. Other things that I think are definitely here to stay is the ecosystem point that Claudia's talked about. I think definitely, and also that the use-based, or even more than that, I just think of it as highly specialized, highly personalized, highly individualized policies. We now got the ability to do that by using technology and big data, including AI. We've got the capacity to do that. Customers like it, but it does raise some big questions that we will all need to think about, companies and regulators and policymakers, about how we use data. Can we protect against various kinds of possible biases in the underlying data, and also even more fundamental questions like, the real basis of insurance was about risk pooling, and the more specialized and personalized and individualized you get, the better tailored it is to the individual customer. But there is the risk that you create uninsured, underinsured, uninsurable parts or groups. And so we'll need to think about these. These aren't new problems. They existed before. The problems around data, insurers have always used data to try to protect against risk, and these are not new problems. But the technology, and AI in particular, means that the speed and the scale of these problems will be much bigger, and so we will all need to think about them carefully. I think this is going to be a really central issue over the years ahead.
Thank you, Matt. And Martin, very briefly, how do you think cyber risk will have changed, and what will be the priorities going forward?
Yeah, I think that very rapidly we're going to see a move from physical to digital, as we heard. So we're going to have a lot more people working remotely. That's going to become acceptable. Matt talked about wet signatures. There's still a lot of cultural reasons why people want to meet. There's regulations saying certain things have to be done in person, and I think those are all definitely going to change very quickly. That's going to have implications, of course. It means a lot more things will be online, will be more vulnerable. So there'll be a lot more focus, as I said, on vendors, supply chains, resilience. And I think that cyber insurance will really take off. There's going to be a good opportunity there, given that we're really going to be moving into a much more digital world than we previously have been.
Thank you, Martin. And I think the audience will join me in thanking for a very informative and insightful discussion today. Coming out of the session, I think we all agree that digitalization is more important than ever to both insurance customers as well as insurers, especially under the current situation. There's still a lot to be done, and the IAF will publish a series of papers on these topics going forward, and we're expecting to release the first scene-setting piece in a week or so, so stay tuned. With that, I would like to thank our distinguished panel today and thank the audience for joining us.